Hi guys, this is the second part to secret to understanding balance sheets. Please, if you are seeing this video for the first time, try as much as possible to check on the part one where we give enough detailed explanation about what balance sheet is made of. But in this part two, we are going to go deeply into the illustration, right? So if you remember from the first assets, the accounting equation, asset is equal to capital plus liabilities. Now, asset is equal to capital plus liabilities. Now, the most important aspect here is to understand that why is this accounting equation, why is balance sheet called balance sheet? It's because of this accounting equation. Why is balance sheet called balance sheet? It's because of this asset is called capital plus liability. It has to balance. This equation is saying that just like your equilibrium, when you have the left side and the right side, your asset has to be equal to, in the same weight, in the same amount, has to be equal to capital and liability, or in the case where it is just capital, or in the case where it is just liability. I explained in the first video. If you want to get more detail about that. So now it means the illustration now says if this is 100,000, your capital can be 70,000, then plus 30,000. Of course, for your examination purpose, you might not, it's not compulsory your balance sheet should balance, which is your financial position. It's not compulsory it must balance. Your postings and other, your postings most importantly attract mark. That is a mark on its own. But I'm trying to explain to you why this is called balance sheet. It's because of this accounting equation. That is, your asset has to be equal to the both capital plus liability, or just liability, or just capital. In the case where it is just capital, then it is 100,000 equal to 100,000. That is, it has to balance. That's why it's called balance sheet. Your asset has to be equal to your capital. And in the case where it is just a liability, it is also 100,000 equal to 100,000. Now, in these three cases, the both left side and the right side balanced. Now, we can create another illustration where we would look at what if this did not balance. Then we'll try to look at what the problem might be, right? So let's say our asset is 100,000. Then at the end of the day, the capital is still 70,000. Then the liability here is 40,000. Now, this will not balance because this is 100,000 equal to 110,000. What is the possible cause of this? This is a liability, right? According to this accounting equation, 40,000, and this is a capital. So it's either three things here. Three things. Is either the capital was overshoot by 10,000. Is either the liability was overshoot by 10,000, or this asset is undervalued by 10,000. I'll come again. The reason why we are having 100,000 equal to 110,000, if you add 70 plus 40, is no longer balanced. It's not balanced. It has to balance. It's supposed to balance, right? So I'm trying to give an explanation as to why it's not balanced. Okay. Now, it's either three instances. It's either this 100,000, which is the asset, is undervalued by 10,000. Or it's either our capital here is overvalued by 10,000. Because if it were to be 60,000, it's just going to be 60,000 plus 40,000, which will give us 100,000. Similarly, it's either our liability is overstated by 10,000, which if this is 30,000, it's going to be 70,000 plus 30,000, which is equal to 100,000. Hence, the name balance sheet. So let's now look deep into these three scenarios. The first scenario that says that this 100,000 was undervalued, understated by 10,000. It means now it will still have to connect to this capital plus liability. It has to connect. No matter the explanation I want to give, the explanation has to still fall into these two categories, one of the two categories, right? Now, this asset is undervalued by 100,000, by 10,000, we say, right? Now, it's either number one, from the capital that we introduced, we actually introduced a capital of 70,000, right? Which is what we have here. And we now purchase uh, an equipment, maybe property, plant and equipment, maybe furniture and fittings worth 70,000. So we use the whole of 70,000 to get our equipment worth of 70,000, maybe furniture and fittings, or maybe plant and machinery, or motor vehicle. Of course, the value is more than this, but I want to use this value so that we will understand them to the best of our knowledge. Yeah? So don't mind the 70,000 where they use. Now, 70,000 plant and equipment or furniture was purchased. We buy them with 70,000 naira. When we go come record this particular 70,000, while recording it, what now happen? We now recorded the value as 60,000. So on our capital is showing that we introduced 70,000 into the business, which is correct. But representing that 70,000 worth of assets that we purchased, we now went to record it as 60,000. So recording that as 60,000 plus the liability of 40,000, it will give us 100,000. So that is one way to do a walk back to see the cause of these discrepancies. Secondly, it's still possible that this 100,000, this 10,000 is undervalued on this 100,000 is coming from the liability. How? So let's say we purchase inventory. So we decided to buy on credits from a supplier. So it's either we are buying our inventory or we decided, okay, we should still buy another property, plant and equipment. So, but let's just go with inventory. So I go to Mr. ABC, ABC Limited, and decided to acquire inventory worth of 40,000. Now, on receiving this inventory, 40,000 is the actual liability, but on receiving the inventory was recorded as 30,000. So if inventory is 30,000 and inventory is an asset, so it means 30,000 plus 70,000 will give you 100,000. So the first scenario, the first scenario is 60,000 plus 40,000 equal to 70,000 plus 40,000. So 70,000 was the capital that we introduced, and we purchased furniture and fitting worth 70,000. But on recording it, we recorded it as 60,000. That is the cause of the first discrepancy. The second discrepancy from liability, the 70,000 was recorded correctly, right? It can still be on both sides. I'll still come to that again. So 70,000 plus then the liability that we incurred as a result of the inventory we purchased is 30,000. It's 40,000, but we recorded it as 30,000, which is still giving us 70 plus 40. So this is still giving us 110,000, while here is giving us 100,000. The third option again here is probably from both sides. So it's either we undershoot here by 5,000, I also undershoot here by 5,000. And how is that? So the 70,000 here is recorded as 65,000 for the plant and equipment, the furniture and fittings, right? Then similarly, the 40,000, the inventory we purchased was recorded as 35,000, which is still giving us here is 110 or 110,000, and here is giving us 60 plus 30 is 90, then 5. So that is 100 and 90, that is 100,000. So this is 100,000 equal to 110,000. Now this is one scenario, right? This is a case of undervalue. Then if it is overvalued, we also use the same approach to record the overvalue. So let's go for the overvalue aspect. Now let's say uh, in the first case it was undervalued. So let's say this 110,000 equal to 70,000 plus um plus 30,000. So 70,000 for our capital, 30,000 for the liability, which will give us 100,000. But our asset is showing 110,000. Here it's also possible that at the end of the day it was overstated, overvalued. It was overstated by that 10,000. So instead of recording 70,000 here, to reflect the plant and machinery, we recorded 75. For instance, 75,000 plus 35,000 will give us 110,000. So we overstated the two by 5,000. Or it's possible we overstated just the capital. 70,000 that's supposed to be recorded here was recorded as 80,000. So 80,000 plus the 30,000, which was recorded correctly. Then here is 100,000. This 110 to 100,000. Or this 30,000 that is there was recorded as. So this is how you can actually think about it. It has to balance. So it's either you go back and check something was wrong somewhere as far as the information you are giving was gotten from a trial balance. If you have a trial balance, you have your journal, like a journal, you have your debit and credit, and the debit and credit are all equal. As far as you don't have suspense account, or you don't have any transaction that is unknown, or you don't have your trial balance not balancing. If your trial balance is balanced, as far as your trial balance is balanced in respect to asset, income, expenses, liability, equity, any form of these five things, items I just made mention of, your balance sheet is supposed to balance as far as they are recorded accurately. But if it did not, this is how you should do a walk back to check how far and what happened. Now, it's also possible that this information is not just coming from financial position alone, that is coming from your profit and loss account. How is that? Now we have 110,000 an asset. So let's use bank as an example because I want to go to operational expenses. I want to track it to operational expenses. So let's say bank, our banking information. So we are including expenses from our bank. And this asset here represents the bank balance, which is 110,000, right? 110,000. That is the asset. So this capital I brought in at 70,000, and this liability. So this will be a loan, cash loan. So we'll call this cash loan. You receive this cash loan from maybe the bank, from a friend and family. So they are all cash, and they are all together what made up our bank balance of one. We're supposed to make up our bank balance of 110,000. Now, but as you can see, we're having 100. No, it's supposed to be 70 plus 30,000. It's supposed to be 100,000, but now we are having 110,000. So how can we relate it to the expense? I'll come again. Remember, the first instance we use just the capital and liability. But now I want to go to operational expense. I want to go to profit and loss, and let's see how this particular transaction is translated to this our asset here that is having 110,000. So it's possible that an expense was incurred. This 70,000 and 10,000 is correct, right? This is 70,000 and 10,000. That's 100,000, 100,000. Now it's possible that this 110,000 actually, the 10,000 above it was an expense that was incurred from the bank. We incurred an expenses from the bank. Now, if you incur an expenses for 10,000 from the bank, let's say without revenue, let's just say I resume my office today, starting my business today with my 70,000 and 30,000 cash loan, I have 100,000 with me. So I have 100,000 with me. Now, from the I'm now recording 110,000. Now, the possible instance, okay, so let's look at it this way 70,000, and let's use this is the best method we can use, and 50,000. The approach I'm using is the best method we can use for the approach. So 70 and 50,000, that is 120,000, correct? Now I have 70,000 as my capital, I have 50,000 as my cash flow. Altogether 120,000 in the bank. We're supposed to have this 120,000 in the bank. But now looking at the value, looking at my bank, I'm seeing 110,000, not 120,000. Short how much? 10,000. Short by how much? 10,000. So it means it's possible we incurred an expenses. So I just resumed office today. I start my business. I decided to pay maybe for light or for water. I needed to wash the office. I needed to set things right in the office. So I spent an amount worth 10,000 from my bank account. So it means it's no longer going to be 110 120,000. It's now going to be 110,000. But why is it not reflected here on our cash flow? Uh, why is it not reflected here as 120? Because of that expenses. So it means at the end of the day, your profit and loss is going to be showing a net loss of 10,000. So remember, I said we did not carry out any transaction, we did not receive any revenue. This is just the money we are using to arrange the office, right? Which is 10,000. So the 10,000 is reflected as net loss or net income minus 10,000. So that minus 10,000 is supposed to come to this place. So 110,000 equal to 70,000 minus 10,000 plus 50,000. So it's supposed to be 110,000 equal to 60,000 plus 50,000, which will give us 110,000 equal to 110,000. So this is the reason why it's still showing us 70 and 50, which is 120,000. So it's supposed to be 110,000. The other instance that I started with, let's go back to that other one because I was trying to use this method to explain, so that I don't get us confused. So let's go to that other instance. So we have 70 plus 30. 70 plus 30. Now in this case, the first instance we go by expenses. The second instance here, we are going to go by revenue. So it's possible that same day a revenue transaction occurred and it was not recorded. Right? The exact opposite of the experience we just did now. So if a revenue transaction occurred and it was not recorded, so let's say a revenue of 10,000. So once we started the business, we started selling that particular day. What amount of 10,000? So it means, and all these things we are trying to look at why the balance sheet, why it must balance. Why it must balance. So now we've generated a revenue of 10,000 naira. In fact, cash, we receive a cash of 10,000 naira. Now, the reason why it's not balanced is because we did not transfer from that profit and loss, because it's supposed to affect your loss, is supposed to affect your capital. Your profit is also supposed to affect your capital. So it means we're supposed to have it as 110,000 equal to 70,000 from profit and loss. You bring in that 10,000 revenue, which is positive. 10,000 then plus 30,000. So you have 110,000 equal to 1. This is 60, right? 70 plus, oh, this is 80. Okay, 80,000 plus 30,000. So at the end of the day, we have 110,000 equal to 110,000. So this is why this information is like this. Okay, so that is our illustration, a little illustration about how we can do this, how we can explain why the asset is not balancing with the capital and liability, or with the capital or the liability, either through understatement or overstatement. So having said that, so that is why you see that if you see an accounting question that is saying 100 and let me use 100,000, that is after using assets. I was not supposed to claim that asset, capital plus liability, but I have it as you see there's a question mark here, then you see plus okay, let me write that out. So assets equal to capital plus liabilities, right? So let's say we have 100,000 here, then equal to capital is unknown, then plus 60. So that is the reason why the answer here would be 40,000, because we know that this is a balance sheet accounting equation. Your capital plus liability have to equate your assets. Or you are given a question mark here, and now you are given here 50,000, then plus 10,000. So this will give you, of course, 50 plus 10,000. Then you know that this is 60,000, because your capital plus liability equals your assets. Or you are giving 70,000 here as an asset, then you are giving 10,000 and plus a question mark here. Of course, having an idea about balance sheet, you know that this is 10 plus 60,000. Now, I want to have a wonderful U-turn. So what if you are given like this, you are given 100,000 equal to, this 100,000 equal to 100,000, then plus question mark. Of course, it's two things. Number one is either there is no liability. So if there's no liability, of course, this is 0. What if you have 100,000 equal to 110,000 plus question mark? Now, in this case, now you are giving asset as 100,000, but your capital is already showing 110,000. It's already showing 110,000. So this, your capital is already above the asset. So it's not a matter of let me add to give what my asset is, because capital plus liability is a matter of you now record it as minus, this is minus 10. So your liability have reduced by that 10,000. So that's when you can have 100,000 equal to 110 minus 10, 100,000. So guys, this is the part 2. As I said earlier, this is the part 2 of the secret to understanding balance sheet. If you've not seen the first part, the part 1, I gave a wonderful demonstration, illustration about how to understand balance sheet. The next video, hopefully, is going to be double entry system. So double entry, where we have credit and debit. I promise you, this is going to be an interesting video on credit and debit, right? Credit the giver, debit the receiver. Whichever confusion that you've accumulated so far, maybe in 100 level or in secondary school, in 200 level, 300 level, or 400 level, no matter the level, or even after school, you understand best how this credit the giver and debit the receiver works in accounting. See you guys in my next video.